Good morning. Welcome back to the Junius Maltby channel. Thanks for joining us today. Once again, you have found yourself here on the channel, joining in on the conversation, discussing news, headlines, and the events taking place in the world around us. Well, it happened. Gold finally hit that 1100 mark. A little lower this morning, 1099.20. We'll see where it closes this afternoon, but definitely good things happening in the gold realm for 2016. World events and the economy keep creating an environment that just makes gold that much more appetizing, and we'll see some more headlines pointing to that during today's conversation. Fears of Venezuela default grow amid drop in oil prices. Country's ability to pay creditors seen as increasingly in doubt. As many of you know, Venezuela's economy heavily tied to oil. It's one of their major exports, one of their major commodities, and with the plunge in oil prices lately, investors are betting that Venezuela might have some problems related to that, pointing to likely a default on its $120 billion pile of foreign debt. That's an event that could trigger a messy battle over the country's oil shipments and deepen its economic and political crisis. George Soros, we're going to cover a couple of his predictions here. He's saying some things pointing to some signs that might indicate further turbulent times here in the 2016 global economy. George Soros says China hard landing will deepen the rout in stocks. The billionaire investor, says he's shorted the S&P 500 index. He's betting against Asian currencies and buying treasuries. Now, billionaire investor George Soros said China's economy is headed for a hard landing, a slump that will worsen global deflationary pressures, drag down stocks, and boost U.S. government bonds. Quote, "A hard landing is practically unavoidable," unquote, he said in an interview with Bloomberg Television's Francine Lacroix from the World Economic Forum in Davos on Thursday. "I'm not expecting it, I'm observing it," unquote. Europe on the verge of collapse. This is another prediction from George Soros. Billionaire financier George Soros has warned that the European Union is on the verge of collapse over the migrant crisis and is in danger of kicking the ball further up the hill in its management of the issue, which has seen more than 1 million migrants and refugees arrive in the region in 2015. Gundlach declines not stopping anytime soon, suggests margin calls taking place. Oil is in massive oversupply due to the zero interest rate policy induced overinvestment, he said, and crashing oil is not the cause of all this chaos. It is a symptom of global economic weakness, as are all the tumbling risk markets. Interesting perspective, very interesting point there. World faces wave of epic debt defaults, fears central bank veteran. Exclusive situation worse than it was in 2007, says chairman of the OECD's review committee. The global financial system has become dangerously unstable and faces an avalanche of bankruptcies that will test social and political stability, a leading monetary theorist has warned. The situation is worse than it was in 2007. Our macroeconomic ammunition to fight downturns is essentially all used up, said William White, the Swiss-based chairman of the OECD's review committee and former chief economist of the Bank for International Settlements. That there is a point that we here on the Junius Maltby have discussed. If you've been here for any length of time in previous videos, we've discussed how the, quote, ammunition to fight downturns is all used up. The Fed has exhausted zero interest, exhausted the quantitative easing measures, stimulus, easy credit, free money, pumping all of this into the economy. Being at 0.25% right now is nothing, so there's nowhere else to really drop it. If the economy goes off the tracks and derails right now, there are no brakes. It's basically, they've used up all the brakes, they've used up all the what he calls ammunition. There's nowhere else to go. Other than a major reset, okay, banks are closed, done, multi-day, maybe week-long bank holidays, complete restructurings of economies, resetting values, telling people basically, yeah, you had $100,000 in the bank, we have revalued it. You now have $5,000 in the bank at this valuation, and so on. So there is ammunition available, but it's the kind that none of us would really want to see exercised by totalitarian regimes, by the states. When I say states, I mean governments. So it could be interesting, in the least, to see what governments would pull out of their hidden pockets in order to correct any major downturn that were to come up. Continuing on, some bankrupt oil and gas drillers can't give their assets away. Interesting article about foreclosures and defaults of certain oil company and gas drilling leases and land holdings that are basically going through bankruptcy or defaulting and then getting gobbled up on the cheap. And in some cases, they can't even give those regions away or those holdings. Hedge fund that called the subprime crisis urges 50% yuan drop. Very interesting there. Of course, the Chinese economy and a lot of the Asian economies are hitting a state of turmoil, along with, look at the Canadian currency. I mean, we've seen a major drop. I know a lot of you are Canadian viewers, but what is it? It's the lowest the Canadian dollar itself has been in 13 years, if I remember correctly, just reading the other day. Something in the realm of 45% or more less than the US dollar. So it takes you guys, what, $1.45 or something to buy one US dollar. I don't know the exact exchange rate right now, but I know it's not good for Canadians. Italian banks hammered. Bad loans hit 201 billion euros. End of Draghi putt. Get out now. Here's a guy advising everyone to basically get out of Italian banks because of the heavy losses. Looks like some serious trouble taking place over there in Italy. Is it systemic? Is it going to spread to other countries of Europe? You know, this is the Euro, the Eurozone, the EU. All of them are somewhat tied together. And they need to stop it before it really gets out of hand, I would imagine. So there's going to be some measures taken there. And amidst all of this, you know, we've just quickly paced through a lot of different headlines there covering different sectors of the globe. Gold is forging ahead, as Citigroup says, taking that haven role again. And it's back in vogue. You know, gold is no longer being defamed as much here in the financial media. And it's amazing how quickly people return to gold with a little bit of respect and admiration. It's similar to cursing your car insurance bill, hating it, despising it, not liking making the payments on it. But then a dump truck backs into your parked car and destroys it, and he's uninsured. And then you call your insurance company and realize they're going to replace your car for free, 100% covered, and you're excited, ecstatic, euphoric, floating on a cloud the rest of the day because, well, you just got a new car and that insurance finally made itself worth it, did it not? Kind of like gold. Some of these investors seem like they hate holding it, they hate having it, they don't like having to put some money into it. But when it's there and when they need it, because everything else just went to zero, including their oil stocks, they still have that nice insurance of gold. But Citigroup's raising the price forecast for 2016 by 7.5%. That's good news. Holdings in gold-backed ETPs climbed to the highest in 2 months. Gold climbed to the highest in more than a week, and investors boosted holdings in bullion-backed funds as global market turmoil spurred demand for a haven. The metal rose as much as 1.9% in New York as commodities dropped in a gauge of world equities teetered on the brink of a bear market. Citigroup Incorporated raised its forecast for gold prices this year while cutting their outlook for crude oil and base metals. The cost of living in the U.S. fell in December, and housing starts unexpectedly slumped, government data Wednesday showed. On the political front, Donald Trump made a case for gold, and no one even noticed. He does say some outlandish things, but the Republican frontrunner hinted at currency wars recently. And in a remarkable and little notice exchanged, he started discussing the fact that he brought this up multiple times regarding China weakening their currencies, and that in turn hurting the United States economy, U.S. jobs, and so on. So he threatened basically to drive down the value of the U.S. dollar. And as you all know, the dollar doesn't need any help being driven down. It'll probably end up doing that very soon on its own. However, if they tried to implement policies that would do so and accelerate the decline in the value of the U.S. dollar, this would in turn cause a dramatic increase and precipitous rise in the value and price of gold priced in dollars. So if Trump becomes president, make sure you've got some gold, because he'll probably crush the dollar and gold will go up in value. Many of you are familiar with Mark Faber, editor of the Gloom, Doom, and Boom Report. He has advised investors that now is a good time to invest in gold because stocks will crash over 40% and the world is on the verge of a new liquidity and debt crisis. Faber says investors would be prudent to diversify into safe haven in gold bullion, which has risen 3% this year and is currently at $1,096 an ounce. He recently told MarketWatch that the stock market downturn could result in stocks hitting lows not seen in 5 years. Faber warns that the S&P 500, which fell to 1881 yesterday, could drop to its 2011 low below 1200. So here you have, guys, on different parts of the financial advisory spectrum. We've got Soros, we've got Faber. Of course, there's Peter Schiff out there. We cover him on here at times. But a lot of there's areas, middle ground anyway, where their opinions are kind of overlapping. And it seems to me that a lot of the individuals who know or have been quite successful in their financial investing careers, a lot of them are of the opinion that the economy is not headed in a very healthy direction right now. So plebes, serfs, peasants such as myself, I like to pay attention and take heed. Peasants such as myself like to pay attention when wizards of Wall Street speak and they come onto the stage with their staff in hand and tell us of dragons that might be coming over the horizon soon. So I'm going to batten down the hatches a little bit, pay attention, continue to maintain and keep on. All right, thanks for being part of the Genius Maltby channel today, for being here, joining in the conversation. 2016 continues to be interesting. Hope all of you guys are well and healthy and continuing to pay attention to the events that are taking place around us every day. All right, have a good one. Keep stacking. Drop a comment below. Join the conversation.